On April 16, 2006, Fox Business reported that the housing market is flashing red as risky adjustable mortgage rates, or what is referred to as ARMs, is skyrocketing. Now, let's unpack what this means for investors and how you can basically navigate using InvestFusion to help you guide through this process. Several factors to understand is this. Number one is that we're experiencing a surging housing inventory. So the numbers of homes actively listed for sale, we've seen a significant uptick. Now, as of April 2025, the active listings has reached approximately over 959,251 homes, making this a 30.6% increase from the previous year of 2024. Now, this rise is basically almost approaching pre-pandemic levels, which is around 1.1 million homes in April 2019. Besides that, the second thing we've understood over the time is that declining buyers' demand has increased. I see there's been an increase in buyers' demand despite availability of homes in the market. So buyers' activity is actually waning. And why is this so? As of March 2025, we experienced that existing home sales fell by 5.9% to a seasonally adjustable annual rate of 4.02 million units. And that's what you've seen in the chart right now. This decline is attributed to higher borrowing costs and, of course, economic uncertainties in the market. Now, properties are also taking a longer time to sell. The average time a home remained on the market in March of 2025 was 36 days, up from 33 days a year earlier. Now, this extension indicates a slowdown in buyers' urgency and an increased competition among sellers. Now, rising months of inventory. So we've seen the months of inventory, which is a measure of how long it will take to sell all current listings at the existing sales price. Now, this has increased to 5.6 months as of April of 2025. This figure is getting closer to the 7 months threshold, which usually signifies a buyer's market. And that's where InvestFusion comes in, because InvestFusion is going to let you know when we've moved completely from a seller's market into a buyer's market. Besides that, we've seen what they call majorly elevated mortgage rates. Now, mortgage rates remain very high, with the average 30-year fix hovering around 7.1, 7.2, even 7.5%. These elevated rates are basically preventing buyers from either pulling the trigger and going ahead to buy. So this, for investors, this environment presents several challenges. Now, let me list those challenges for you, and we'll see how we can navigate this using InvestFusion. Increased rates volatility. So the uncertainty in rates makes it so difficult to predict mortgage rates. We've seen increased inventory. So with more homes on the market, competition among sellers have intensified. Now, this makes that buyers are becoming much more hesitant to go ahead and pull the trigger in these homes. These factors can squeeze profit margins and make it difficult for you as an investor to move ahead. So, but how does InvestFusion comes into play with among all of this? Let's find out. InvestFusion is a platform that's designed to assist investors in making informed decisions. Among those decisions is real-time market analysis. So it stays updated with the latest market trends and data. Risk assessment tools help you to evaluate potential risk associated with different mortgage types, including the ARMs we've just unpacked. It also has a portfolio management section that helps you evaluate the potential risk associated with different mortgage types, including the ARMs. If you look at item 7 here, or point 7, for residential multifamily units, InvestFusion looks at what they call the investment return calculator. This tracks properties' built-in equity for profitability. For commercial properties, however, it goes a step further. In item 7 here, it says it estimates cash-on-cash returns, factoring in loan costs, tenant improvement, and potential bridge loans, including cap rates. In the current landscape, these are some of the things we think, or methods we think you can use to navigate this process. Number one is diversification on your investments. Don't put all your nest eggs in one basket. Explore different property types and locations. For example, we cover multifamily units. we cover commercial properties, and of course, we cover single family units. With InvestFusion, you eliminate the risk potential or the risk associated with going in buying blindly. So just utilizing just regular listings, the Zillows, the Crexi, the LoopNet, you're still buying blindly. And with high mortgage rates and all these major red flags we've seen across the market, it means that you are not going in prepared. With InvestFusion, you go into the market and then you go in much prepared to go and pull the trigger for the right property. Focus on cash flow. Again, InvestFusion helps you to prioritize cash flow. So prioritize investment that offers steady cash flow to buffer against market volatility. Of course, you want to use platforms like InvestFusion to stay abreast of market changes and adjust your strategies accordingly. Remember, when you're informed decisions are the cornerstone of successful investing.
The housing market is indeed flashing red, but savvy investors utilize tools like InvestFusion to help them navigate these turbulent times. So, utilizing smart strategies, you only want to go into buying a property with all the right data and tools fully exposed, meaning never buy a property blindly. How do I mean? Just going through listings on platforms like Zillow, Crexi, LoopNet, and just by default utilizing those listings and go ahead to pick a purchase is a blind decision. Utilizing tools like InvestFusion, it flags all potential red flags. Among them is major environmental decisions, or what they call environmental violations, zoning violations, structural and foundation issues, plus potential foggy window issues. These are big ticket items that InvestFusion prevents you from going ahead to purchase. With high mortgage rates and, of course, a higher inflation rate we're currently experiencing, spending your hard-earned money on due diligence fee is an absolute no. Meaning, you have to use InvestFusion to understand the profitability of a property. Does it have built-in equity? Just few days ago, I did a thorough video of a property that is 90.01% below the market using InvestFusion. There is no other tool that will give you that kind of access. Number two, so you want a property with built-in equity. Number two, that is cash flowing. Looking at its NOI, and InvestFusion helps calculate, or it gives what they call a calculator, a forecast based on your borrowing costs and your NOI and your potential profitability to give you a streamlined forecast into the future. Meaning it does all the heavy lifting for you and lets you know if you're going to be profitable in the long term. Number three is it also isolates and guarantees or gives you the current living square footage, which means it tracks the previous appraisal report to validate the living square footage and validate the true property's values worth for you. That way, you know you're buying the actual number and not anything else that is falsified. It means you are buying the right deal. So if you're a deal finder, if you're an investor or you're a beginner, it doesn't matter how long you've been in the market. What InvestFusion does, but InvestFusion brings all of that within seconds in your fingertips. And then with a click of a button, you have access to all of these data. If you found this video exciting and important, and of course useful, make sure to subscribe to our channel. And of course, hit the like button. And maybe share these videos with your friends and loved ones. Because this indeed, we are approaching a time where understanding how the housing market is transitioning in 2025 is the way to go ahead. Until next time, stay blessed and stay informed.